Good day everyone, welcome to my YouTube channel. If today is your first time chancing on my YouTube channel, make sure you like, share, subscribe and then comment for the next videos. Okay, so today we are taking accounting and then we are focusing on principles of double entry. And as we all know, the principles of double entry is the golden rule of accounting. But then we want to consider how credit becomes increased, and then when you are debiting an account, it's a decrease. Most people find it difficult considering those factors, the decreasing and then increasing factor. So, but then before we move on, let's look at what principles of double entry is. We all know principles of double entry is the golden rule of accounting, which states that for every credit entry, there must be a corresponding debit entry. And for every debit entry, there must be a corresponding credit entry. So now, let's consider the following transactions and then we take it up from there. Now, considering the first transaction, we have what? Bought office furniture at 8,500 Ghana cedis. So we said with double entry, this transaction affects two books, which we can consider the office furniture and then the cash involved in the transaction. So since it's affecting two books, let's open the account for the two books. So now we have our cash account. And then we have our what? Our office furniture account. Now, we said bought office furniture at 8,500 Ghana cedis. Now, since we are buying an office furniture, the office furniture is coming into the organization. So that means the organization is receiving the office furniture. And then we have a rule which states that debit what comes in and then credit what goes out. And then for this rule, when we apply, since office furniture is coming in, we debit office furniture with the amount involved, which is 8,500 Ghana cedis. So we have 8,500 Ghana cedis here. And then the narration would be the other account involved, which is our cash account. And for double entry, it states that for every debit entry, it must have what? Its corresponding credit entry. So since we debit office furniture account, then the corresponding should be cash account. So we have our 8,500 affecting the credit side of the cash account, and then the narration would be the other account involved, which is furniture account. So we have our furniture account. So this is all that for the first transaction. Moving on to the second transaction, we said sold goods to Mr. Okocha, cash 12,000 Ghana cedis. So selling goods to a customer, when we sell goods to a customer, it also affects two books in the transaction, which we have Mr. Okocha and then sales account in the transaction. So now let's put it into action. We have sales account, and we also have Mr. Okocha account. considering both accounts, we said sold goods to Mr. Okocha. So if you are making sales, that means the goods are being sold out of the organization. And then there is a rule that states that credit what goes out and then debit what comes in. Or you can use the personal account which says credit the giver and then debit the receiver. So if you are crediting the giver, who is giving in this transaction? We have sales account and then Mr. Okocha. And then we are selling goods to Mr. Okocha. So since Mr. Okocha, we are giving to Mr. Okocha, sales is giving and then Mr. Okocha is receiving. So here is the case, you credit sales account and then debit Mr. Okocha account with the amount involved in the transaction. So if we have our 12,000 credited to the sales account and then the narration will be Mr. Okocha. And then Mr. Okocha receiving, we have sales. We have 12,000 which is debited to Mr. Okocha account, and then the narration will be sales account. Now, this is for the second transaction. Per this explanation, I hope we can try our hands on the third question. But then, someone will be wondering how we say debit is what? Increase and then credit is decrease. Meanwhile, we are debiting the one receiving and then we are crediting the one giving. Because when you give, you are losing, and then when you receive, it's going up. But then we are saying that debit is decrease and then credit is what? Increase. So now let's prove how debit becomes decrease and then credit being what? Increase. Okay, we are yet to confirm whether debit is solely a decrease and then credit is solely increase. Now, so we have our debit, which is decrease, and then credit, which is what? Increase. Now, based on accounting, everything we do here, it's what? It's in monetary terms. Let's consider this particular transaction to confirm whether debit is decrease or increase, and then whether credit is decrease or increase. So now it's a purchase goods to 35,000. So here we have purchases account and then cash account involved in this transaction. So now let's open our two accounts involved. We have our purchases account. We have our purchases account. And then we have our cash account. We have our cash account. Purchase good 25,000. We say purchases is receiving. So we debit the receiving account and then credit the giving account. Cash is giving, purchases. So we debit purchases with 25,000 Ghana cedis, and then we credit cash account with 25,000 Ghana cedis. So here is where the debit and then credit or increase and then decrease comes in. We say purchases is receiving, but then we are debiting it. So why is it then a decrease since it's receiving? Here, whatever we are doing, it's in monetary terms. So whatever purchases is receiving, that means you bought goods from a supplier. If you buy goods from a supplier, you pay in cash or you pay with money. So whatever you are paying it's decreasing in the organization. So if you pay 25,000 for the goods purchase, 25,000 will decrease or will leave the organization. So we have 25,000 decreasing the financial capacity of the organization. So that makes debit a decreasing factor in your account. And then cash is receiving, and then they are saying when we receive or the one giving should be credited, and then they are saying credit is increased. So how is credit increased in this case? Since you are paying your supplier is receiving an amount of money. So this cash account you prepared is an account for your supplier, or an account which shows that you paid your supplier 25,000 Ghana cedis. So since you are paying 25,000 Ghana cedis, then there will be an increase in your supplier's account. So since there is an increase in your supplier's account, we are crediting the supplier with 25,000. So this confirms that whenever there is a credit in a particular account, it increases that account, and then when there is a debit, it decreases the account. And I hope this explanation makes it clearer to people who are facing difficulty to understand whether debit is increased or whether credit is increased and then debit is a decrease. So viewers, this will be the end of the tutorial on principles of double entry. We'll bring you more updates, and if you find it interesting, please don't forget to tap on the share button, share to your friends so that they'll get engaged on this topic. Turn on your post notification, like and comment when there is suggestion or any addition. Thank you.